Hello everybody, today's stock is Analog Devices, ticker symbol ADI, which just reported earnings today, so I figured now would be a great time to go over the company and check out its financial numbers. So if you want to pause it here, that's fine, that'll tell you a little bit about the company, but in short, Analog Devices creates products like data converters, which translate real-world analog signals into digital data, as well as translate that digital data back into analog signals. So these are devices that are essential for semiconductors and for the digital world at large. 90% of the company's revenues come from business-to-business transactions, so the majority of their revenue does not rely on consumers. And just over half of that total revenue comes from industrial customers, 1/4 of it comes from automotive customers, 13% from communications customers, and the final 10% are consumer transactions. In case you needed a reminder, digitalization is going to be the future of everything, and so this should be a perfect wave for Analog Devices to ride in order to continue to increase its profitability and continue to bring shareholder returns. In fact, here are a few of the megatrends that the company expects to continue to drive revenue growth into the future. But not only that, the company has many competitive advantages that allow it to maintain its current market dominance, which include high performance of their devices, over 75,000 products, as well as major supply diversification, a long average product lifespan, and tons, and I mean tons of different customers, over 125,000, with none of their customers making up more than 5% of their total sales. I did want to point out that on the right hand side we can see revenue by geography, and the company is very well diversified, with their largest end market being the Americas at 35%, but Europe, Middle East, and Africa is 24%, the rest of Asia Pacific is 23%, and then Greater China is 18%, meaning the company is not too reliant on any one region of the world for most of its revenue. I will caution and say that although ADI doesn't yet seem to be in the crosshairs of any sort of sanctions, there is risk that their Greater China business could at least diminish by a little bit, if not entirely, in the future, due to the ongoing technology war that appears to be playing out between the United States and China. And just to take a quick look at the company's long-term forecasts, we can see they are targeting 7 to 10% CAGR in their revenue growth, an adjusted gross margin of 70% or higher, free cash flow return of 100%, a relatively small amount of capex, and they're aiming for $15 earnings per shares by fiscal year 2027. With those forecasts in mind, though, we can see here by the headline that Analog Devices is expecting to see sales continue to slump in the coming quarters. In the company's earnings report today, they announced that they had earned $2.01 a share on sales of $2.72 billion in the quarter. That compares to an expected $2.02 a share and sales of $2.7 billion, meaning the company just barely beat top-line estimates and just barely missed bottom-line estimates. Year over year, ADI's earnings have fallen 26%, while their sales have gone down by 16%. And the worst news is probably that the company expects a $1.70 share earnings on sales of $2.5 billion in the current quarter versus an expected $1.91 a share on sales of $2.69 billion, meaning the company is expecting to earn about 20% less than analysts were expecting prior to their earnings announcement. So before we jump into the financial numbers, can you please take a moment to like this video and subscribe to my channel? It would really mean a ton to me. I do really enjoy bringing you guys these videos, and that would be an easy and free way to say thank you. And with that, let's see what's ahead of what's possible. Revenues are up at a CAGR of almost 20% since 2018, but that number has flatlined quite a bit since 2021. EBITDA has grown even more, but again, flat since 2021. And the company's operating earnings have not grown by quite as much, but we are seeing an improvement over the last few years. Gross margins have declined, but very marginally, no pun intended on that one. And operating margins have done the opposite, expanding just a little bit. ADI's return on assets have fluctuated a little bit more, but they're still very steady around that 6.5%. The company issued a lot of shares in 2020, and since then they have been slowly buying them back. But over the last 5 years, shares outstanding have grown by almost 8% annually. Cash on hand has fluctuated a lot, with a major spike in 2020 likely due to issuing a lot of shares. Analog Devices seems to have normalized the amount of cash that they kept on hand, and we'll see if this number can be kept steady in the future. Long-term debt has grown a little bit, but not nearly as fast as the company's earnings, so there's no major issue here. Net interest expenses have also basically been flat, so again, I have no issues with this company's financial leverage or debt situation. Levered free cash has grown quite well since 2018, although these changes do seem to come in large spurts and then kind of flatline to slightly get worse over time. On the other hand, free cash flow per share looks much better and is growing a little bit more steadily. ADI's dividend per share has grown really nicely over the last several years, and its 5-year CAGR is 15.3%, which is excellent. At the same time, the company's payout ratio has fallen over time, which is a really excellent sign. And finally, to check out the company's fair value, we can immediately see that ADI tends to trade at a bit of a premium. And if I change the fair value PE, we can see that 18 approximately matches where the stock tends to go over time. With a current PE of 17.1, I would say that the company is very fairly valued, but there's no real undervaluation or margin of safety here currently. Add on top of the fact that analysts expect this company to actually get smaller over time by 0.5% over the next 5 years, meaning that the fair value of ADI by 2026 is actually $178. Which isn't far off from its latest closing price of $183. I do think this projected CAGR is probably a bit pessimistic, but semiconductors are a cyclical industry, and so it is entirely possible that the company really doesn't go anywhere in the next 5 years. So to summarize what I like about Analog Devices, first and foremost, I really like that it has such diverse revenues. The company is diversified geographically, it's diversified by industry, it's diversified by product type that it sells. I mean, there's just so many ways that this company is diversified that there really isn't one major risk that the company holds, maybe outside of just its business that takes place in China, again, because of the technological tit for tat that we see going on between the United States and China currently. Second, ADI has shown that it has much more stable growth versus its peers. So if we look at other semiconductor companies, they tend to really have a concentrated portfolio of either products or customers or both. And so when the cyclicality of semiconductors sets in, those companies tend to really underperform for a while. But because ADI is so diverse, that cyclicality is smoothed out quite a bit for the company. It's certainly not immune to cycles, but it is much better prepared than most. And finally, I really like the great dividend record. The company's been growing its dividend for the better part of, I believe, 20-ish years, I think just under 20 years. And that dividend continues to grow substantially. So if you are a dividend investor, this is a very interesting semiconductor company to check out. And for what I don't like about the company, first and foremost, its valuation is just a little bit high for me. I don't see the margin of safety that I personally need to invest in the company. Secondly, of course, I'm not a fan of the fact that analysts are projecting flat growth over the next 5 years. And while I do think that's pessimistic, it's also telling that industry analysts who tend to be on the more optimistic side are expecting such a flat 5 years for a company that tends to grow at 7 or 10 or 12% per year. And besides those two things, I really couldn't find anything major that I did not like about Analog Devices. But even so, I think that for me personally, the company is just not at the proper value zone for me to want to invest. It is an excellent company, and the second it drops down to a PE that's just clearly undervalued, I would be very interested in revisiting Analog Devices and potentially investing in it. But for me personally, at this point, I think that the company needs to either show that it's going to start growing again or fall to a value that is just too low for me to pass up. So with that, I hope you guys enjoyed this analysis. Please leave a comment down below letting me know your thoughts. What do you think of Analog Devices? And as always, a final note, please remember to like the video. It really helps me with that mysterious YouTube algorithm. And subscribe to my channel for more videos like this. Thank you so much for taking time out of your day to watch this video. And with that, I hope you guys have a great day. Bye.